everyone. I just wanted to take a few minutes out to talk about mortgage rates and just kind of generally about what's happening and buyers' reluctance and even sellers' reluctance to make any kind of change right now because of what's been happening. So we've all heard, certainly through the media, that the Fed has increased the interest rates and has done so periodically this past year. So what does that mean? The reason why the Fed increases the interest rate is because it's really the only tool they have in their toolbox to bring inflation down. So why does that bring inflation down? So first off, interest rate increases are tied to things like credit cards, home equity line of credit, car loans, personal loans, but not mortgages. All right, just as an FYI. They are also tied to business loans. And so that piece is incredibly important because if it costs more money to do business, then businesses are going to be a little bit more hesitant with investing, and conceivably you could see some changes in hiring practices as well. And so what does that mean? That means that people that were buyers are now going to be in a position where they're not buying as much. They may even be saving. And so what that does is that changes the whole supply and demand. So before you had very limited supply of many products on the market, but you had a lot of buyers for them. So of course the prices increased. So now if you have fewer buyers, you're going to see some price stabilization and price drops. Okay, so that's important. So what actually drives mortgage rates? Inflation drives mortgage rates. So when inflation goes up, mortgage rates go up. When inflation comes down, mortgage rates come down. All right, so if the Fed does their job ultimately and inflation comes down, then that means that mortgage rates will come down. So many of the experts are predicting, end of year and through the beginning of 2023, that we will be seeing a rate drop for mortgages. So keep your eye on that if that is one of your big hesitations in terms of buying or even putting your house on the market. On a side note, and I always say this, if that is the only reason why you are holding off, I would really think twice about that. You know, if you have a sale price range and you know that's going to result in, an affordable monthly payment, and that's the only thing holding you back, I honestly just would not give it so much weight. And so the reason why I say that is because the interest rate does not have to be permanent, and oftentimes it's not. You can change that through refinancing down the road. So I just hate to see you lose out on a house over something that really is changeable. Okay, so just food for thought, and I hope you find this helpful. If you have any questions, feel free to reach out to me. I'm more than happy to help. Thanks, and have a great day.